Hey guys, what's up? Spenny here. So in today's video, I have a super exciting Virgin Galactic video for you. First thing we will be getting into is that Virgin Galactic is going to be growing in 3 phases. And I want to cover those 3 phases for you guys so you kind of understand the timeline in front of the company. Next thing we're getting into is the demand. So Virgin Galactic will likely experience very high demand in the near term, and that's partially because their supply is so constrained. We'll be getting into that and see some of the advantages with that. And lastly, I will be getting into their valuation. So a Seeking Alpha author basically did a free cash flow model and came up with his own valuation of the company right now. It does represent a lot of upside, so I'll show you guys how he gets to that number. Before we do get into this video, please drop it a big thumbs up if you find it informative. Feel free to subscribe if you want to see more content like this. We'll be covering Virgin Galactic a lot on this channel. Anyways guys, so the first thing to get into is I am a Seeking Alpha subscriber, so I was basically forced to subscribe to their service. I was no longer able to actually view any articles or anything in regards to Seeking Alpha, and this made it kind of difficult to do any more research. So anyways, I pay the $200 a year, and now I have all kinds of advantages, and it's actually a pretty good service. A lot of you know I was subscribed to Motley Fool. I've canceled that subscription, and now I'm just subscribed to Seeking Alpha. So I will try to show you guys the benefit of this service and pass it along to you. Anyways, so the first thing I want to cover here is the 3 growth phases the company is going to experience. This is super important to understand. So, in its first phase, it is planning to generate the majority of its revenue from selling tickets for private space flights. They also expect some portion of revenue to come from microgravity research, space infrastructure, and services. So most people already know this. Virgin Galactic is a space tourism business at its core, and it also has the NASA contract, which allows them to bring payloads to space, and they can generate some meaningful revenue that way as well. That's the first phase. Now, moving on to the second phase here, the company is planning to offer long-haul flights, hypersonic and supersonic, and tap a staggering $900 billion aviation market. Now, he is a little bit incorrect in this. I believe the actual private jet sector is worth $300 billion, not $900 billion. He's probably including every single kind of aviation revenue in this. That's not accurate. It's most likely closer to $300 billion. Still, obviously, a massive amount of revenue considering we're only trading around a $7 billion market cap. So either way, it doesn't make a huge difference, but I just want to clear that up for you guys. And also, this is what gets ARK Invest, so Cathie Wood, so excited about Virgin Galactic. This is where they do the bulk of their research into the company. They believe Virgin Galactic is going to disrupt the private jet sector with their supersonic flights, and there's a huge market to tap into this. This is where Virgin Galactic can really explode. But again, this is second phase. This is quite a few years away. By my estimates, I think this will most likely come between 2028 and 2030. Still quite a ways away, guys. However, if you do get into this early, that's where you see the massive 10 to 50x in the stock, and that is not unrealistic. You can definitely see those kind of gains. However, obviously, this is a very speculative company now. They haven't proven themselves, and they haven't proven the ability to scale. Anyways, third phase. So in the long run, it is planning to offer habitats and real estate in space and space resources and energy. The prospects are indeed limitless, he goes on to say. Now, this is mostly speculation by this author. There's no guarantee Virgin Galactic will indeed do this. Now, there is another company that announced they're going to build a space hotel for the year 2027. Now, if that actually does happen, I could definitely see Virgin Galactic offering private space flights to that hotel. So I do think this is a realistic situation. However, this is ultra long term. A lot needs to go right before even considering this as, something that's actually going to happen. It's nice to dream about though, and it's just nice to kind of, think about. But really, I wouldn't put much weight into it but it does kind of illustrate the potential in this company. So anyways, as you guys can imagine, if all three of these phases actually do come true, the potential is pretty much limitless for this company. The market cap will be well over 100 billion. There's no doubt about that. But this is a dream. This is one of the most speculative companies, and they have not proven themselves. So I got to make that clear. Super high reward, but the risk is definitely there until they actually prove themselves. So anyways, I want to move on to the demand part. The company indicates that it is going to increase prices to justify the strong demand. So in my model, I assume flight prices increase to 350K once the backlog of 600 flights is cleared up. Now, I think this is actually realistic. In the short term, Virgin Galactic has more than enough demand, and they're really supply constrained. So they're going to have a lot of pricing power. Now, tickets were estimated to be about 250K. This could definitely increase to 350K until that demand actually gets cleared up and they can increase the amount of ships. So the more ships, the more supply. Just a simple supply and demand equation. This is all assuming that people want to fly though. I think that that's not going to be an issue. To continue on that, there actually is a lot of people globally who can afford this. So based on the company's analysis of their existing reservation holders, they project that demand will be from clients with a net worth of more than 10 million globally. There are approximately 2 million adults with net wealth above 10 million, according to Credit Suisse, and this number is expected to grow approximately 6% annually by 2023. So, in my opinion, this is more than enough demand for, quite a few years, guys. They're going to be so supply constrained that they're not going to know what to do with all the demand. So in the short term, I think that they're going to have lots of pricing power to actually increase their ticket price. However, in the long term, as they scale, I believe they're going to want to cut down the costs and increase their total addressable market. So in the long term, I'm talking 10 to 20 years out, I think eventually we're going to see a 50K ticket, and this would just make their total addressable market explode. And I think scalability is needed in the long term. So I think that's kind of where Virgin Galactic will go with their ticket prices. Obviously, this is a lot of speculation and anything could happen in this time. So now looking at the valuation. Now this author comes up with a valuation using a free cash flow model. So it says here, my FCF valuation based on sales projections outlined earlier comes to $48 per share. And this is representing a 26% upside. He goes on to say, that's when the market price was $38. Right now we're trading around $30. So obviously the upside is a lot more than that. However, something to keep in mind here, guys, is that you can't really use a free cash flow valuation until the company has actually proven themselves. So here I'll show you the chart he uses. This is how he comes up with his numbers. So this is assuming that Virgin Galactic will start space tourism in the near term and that they'll actually be able to prove that concept, they'll be able to scale, and they'll be successful. Those are all unanswered questions right now. So if you do believe Virgin Galactic is going to be successful, they're going to be able to scale, then yes, I would say fair value could definitely be $48 a share. He actually says here just above the chart that if you use a terminal growth rate of 6%, then the actual valuation would be $87 a share. Now, I agree with him, this is accurate what he's saying. However, it's a really dangerous way to invest in a spec company like this because the biggest risk is that they don't actually prove that they can do space tourism. So, I've said this with my last High-On video, and I'm going to say it with this company. Super speculative companies like Virgin Galactic, it's best just to dollar cost average into until they prove the concept. Once Virgin Galactic actually shows us they're flying to space with Richard Branson in the back, then I would say dollar cost averaging isn't the way to go anymore. You can now go heavier into the stock and be confident that they are going to execute their future plans. So that 3 growth phases that I talked about, once they prove their concept, I believe they're going to just absolutely skyrocket through all of those phases, and this company is going to go to 100+ billion market cap one day. Until then, this is a nice dollar cost averaging stock, in my opinion. Anyways, guys, this is all I have for today's video. Really appreciate you watching until the end. Make sure to drop this video a big thumbs up if you liked it. Feel free to subscribe if you want to see more content like this, and I'll see you guys on the next video.